Welcome back to Hustle and Grind Finance. I'm Guy, so glad you're here. And how is it that people my age are buying homes right now? Seriously, have you ever thought about the fact that your friends own a home and you can't even imagine owning a home? Maybe you're living with your parents, you're renting, you're barely able to afford rent. High interest rates, high home prices, high property taxes, and high property insurance. You can't even imagine buying a home. That's what we're talking about today. On this video, we are gonna get very specific. Maybe on social media, you've seen young people buying a home. Hey, just closed on our first home, you see, and you're so frustrated, you're so annoyed that you don't own a home. Maybe at 25, 29, 35, and you've had that quiet thought in your head, how are they doing this? You've had to have had this thought. Today we're gonna break it down honestly. There's no judgment, it's just math and reality. Because math doesn't lie. We're gonna get behind the scenes on those picture perfect posts, and we're gonna get down to the root of it. Because the answer is not what you think. Don't forget to like this video, smash the subscribe and the bell button so you don't miss any fantastic content here on Hustle and Grind Finance. Well, before we get to anything else, number one, it's that home ownership is not for everyone. First, here's real perspective. It feels like everyone is buying a home, but it's actually not true. I mean, you don't own a home. So other people don't own a home. Social media amplifies milestones, and people tend to over-exaggerate when they hit that milestone. It doesn't show all the behind the scenes. Nobody's posting something like still renting, building a savings account responsibly, not going on vacation so I can buy my next home. What you're seeing is a highlight reel. Home ownership rates among younger people are still significantly lower than the older generations. You know this. Every year, the average homeowner age increases by a year for the last 20 years. So if you feel behind, you are not alone. Point number two, here's the obvious answer for what's going on. Dual incomes, dinks, dual income, no kids. They are carrying the market by far. The number one people your age are buying homes. It's not just one person buying a home. There's two people, married people. So a $400,000 home looks impossible, say on $75,000 a year. It looks very different on $150,000 household income. A lot of first-time buyers are married, engaged, living together, or they just have combined income. So when the bank looks at them, they consider all of the incomes. Lenders qualify based on household income. That's a massive factor. If you're single, you're not crazy for feeling like it's harder than it should be to buy your first home. Point number three, family money is bigger than you think. This one makes people super uncomfortable, and honestly, it's frustrating to know that some people inherited money from a dead family member or somebody just giving them a massive lump sum or a down payment. They got family assistance. Maybe it was a gift, again, an inheritance, or they live at home rent-free for years. How much money could you pile up for a house if you did not pay rent? Parents co-sign loans. Many first-time home buyers are not starting from zero. They get help. Here's the important part. You don't see that part on Instagram or TikTok. You just see the keys. There's no shame in receiving help. If you're comparing yourself though, without knowing the full picture, that's what Hustle and Grind is for, to let you know the real deal. You're comparing incomplete data, Don't you feel better already? Section number 4. Some people are extremely house poor. This is me. I'm putting my hand up. Here's an uncomfortable truth. Some people are stretching, like 100% of my income goes towards PITI, principal, interest, tax and insurance, and utilities. And my wife covers things like food, etc., etc. We are stretched. We spend way more than 50% of our take-home pay on housing. We make retirement contributions, but we don't go on a lot of vacations. We have a very little emergency fund. We count on raises. We are counting on refinancing later. We count on appreciation. We are riding a very thin, narrow margin. That might not be the way you want to live. We are taking a risk, but it is definitely not stress-free. The just bought post in Instagram comes with baggage. You don't see the times that on a Saturday I fix a broken sink because we didn't buy a brand new house. We don't have brand new furniture in our house. We saved. We lived in an RV for a while. I'm not kidding you. We saved and saved. So it's so important to know that some people are extremely house poor. Number 5, geography arbitrage. This one sounds super complicated. It's absolutely not. Some people buy a home because they're getting coastal pay but live inland where it's cheaper. They're getting a salary for, say, New York or San Francisco or Miami, and they moved inland. They left the high cost of cities but retained their salary because they're a remote worker. They were allowed to keep their income. $120,000 income in coastal city might feel tight, but in the Midwest, it's a very different story. Relocation trends are very, very real. Number 6, not everyone is buying their dream home. This is the honest truth. Some people's homes are in disrepair, just like mine. My house flooded the first winter that we moved in. We had to do so many repairs. Water heater broke, the heater broke, pretty much every appliance broke. House hacking is a real thing. People rent rooms to make extra income. They buy duplexes. They take on, again, like us, a fixer-upper. They use an FHA or VA loan. They don't put 20% down. They put more like 3 or 5% down. This is true. This is still allowed today. They have PMI, which is prime mortgage insurance, which is an extra cost, but it's worth it because they don't have the cash up front. They want to get into the market of home ownership so they can get the appreciation. It gets people in the game. Number 7, some people bought early. Timing matters. If you bought in 2020, you were at like 3% interest. Right now it's like 6% interest. Somebody who bought back then, they locked in for 30 years. So they've got lower prices. Their monthly payment is dramatically lower than somebody who bought the same house today. Number 8, here's the real question. Should you rush to catch up? You obviously clicked on this video because you feel like you're behind. You feel frustrated because you can't own a home. Or should you make a decision based on your math that this video showed you? Buying a home is not a race. There are so many things you do behind the scenes that get you to where you want to be. It's a massive financial commitment, whether or not it's a good deal. If you're ready, if you have stable income, if you have an emergency fund, if you're managing your debt, if you have a long-term plan, fantastic. If you're not, that doesn't mean you're behind. It means you're thinking, you're prepping, you're preparing, and eventually you're going to strike when your iron is hot. And thinking wins in the long term. Well, if this video made you feel less crazy, hit like. If you've been quietly wondering this, comment down below home. You are absolutely not alone. And if you want honest finance conversations without the hype, subscribe to Hustle and Grind Finance, where you'll find fantastic content. We are building wealth intelligently here. We will see you next week. Bye.